Well, hello members, and welcome to this week's show on the weekly review. Big change last week. I mean, we've been talking about the potential for this for some time, right? Those MTTFs to reset. We did get it, and we got it in a big way. 2.8% here, 2.4 brings down the gains on the year tremendously. NASDAQ. Not flirting with negative territory, but the worst performer so far, 2.4. S&P up 4% now, bringing it down from almost 7%. So a big change in terms of the movement. We've had that range now for 2 months. They give it up, and they give it up big. If we look at the technical summary, right, the technical picture, we had talked about the last couple of weeks the potential for this to take place, right? And I'd outlined this, I think, the last 2 weeks in a row about those MTTFs resetting. And what I was talking about in particular, right, was for this reset to take place, right, and for us to get this back either to sideways or bearish. That would allow us on some sort of a temporary pullback, right? And the ideal here is that you get some sort of a temporary pullback that then leads to another move. So you have this big move up, eventually a temporary setback resets the MTTFs because they were extended, and then eventually you go back to new highs. Now that's the ideal case for the bulls. Question is will we get that? And anytime this happens, of course, the first thing one has to be concerned with is that, well, what if it's different this time, right? That's always the way people think and the way we're trained to think. Had we gotten, say, the little small setback, right, within that top range, things wouldn't have been not nearly as questionable. But now we're into the bigger one, and let's look at what that really looks like on the charts here. Let's pull up the S&P 500, and so what you can see here is that push as it came back, right? That push brought us not only below that one we were targeting, right, that we tried several times to get under. Not only did it get us there, and we did it right on the opening, then we just kept selling off, and we took out one after another, right? Took out 3 of them. We go bearish as a result. Now we're hanging down here in this area, and now we're back into those bullish retest regenerates that have been hanging out there for a long time. Where do they come in? Well, the first one is the higher one, and that's on the daily. And that comes in right around, and I've got these numbers in the notes for you. 2134 is where it started, so right about in here somewhere. And it goes down to about 2120. And so that's the higher, and that's on the daily chart. That's the higher bullish retest regen that we just came into. Now the volume back there when we actually broke out, right, is this volume compared to the volume on that swing point. The volume here is about 36, which translates into about 3.6 billion. That's the higher of the two. We came back into it with 4.2. So we're actually hitting it with more volume. What that suggests to me is that we're probably going to try to get deeper into it. Now, the bad thing is that when you come back after more than 6 bars, right, we really shouldn't see this thing get into the lower third, but that's in fact what we're going to do. And what that tells me is that the bounce is not going to be probably as strong as you would expect, and that eventually you're going to come back and try to do this all again. So that's the most negative part of everything I'm going to tell you this weekend. And that is that when we get the bounce, we're probably not going to go straight back to new highs. We're going to come back and potentially test a full retest regen off the bearish setup now into this area. And that's probably as far as we're going to get on the bounce. That's also going to be the top of this breakdown bar, which so many times ends up being the case. And so the best we can expect on the bounce when it ensues is probably up into that area. That's the bad news. The good news is that this is not happening just on this time frame. It's also happening on the weekly time frame. And if I bring the weekly chart over, right, we also have a bullish retest regenerate that's happening here. That price point was about 2134. It's actually a little bit farther over. It's back over here somewhere. And the low on it is also about 2120. So we have both the short term and the long term targeting about the same price point, 2120, and we start getting into other swing point highs as well as we get into that area, I suspect if they don't buy it here, then we really have something more significant taking place. Odds are they are going to buy it, and we're going to see this bounce come right back. Will it set up something that looks like a little ABCD structure to the downside? Yes, it can. And matter of fact, that's one of the things I point out when I'm doing the notes here, and that is that the worst situation, right, the worst case situation is that you get the bounce, and it's on the push back up that we potentially end up seeing a failure, and that's what I'm highlighting here, right? That's what we have to monitor very closely as this thing bounces, because when you get larger drawdowns, and you know, this is 2% after a big run, it's really nothing in the larger scheme of things. You can see that on the weekly chart. But if we get a bounce, right, so you get the first push down and you get the bounce, and the bounce fails at wherever the resistance is that we just pointed out, then the larger move down can take place, and then you can even get, you know, nested ABCD structures to the downside. That's a ways off. If this really is a top, that's the way it will probably play out. I'm not pessimistic. I don't know that this is a top, and I don't think that it's a top. But then again, you know, the larger thesis that I had coming into this year, if I scroll all the way down here, was that this market was going to it was going to be a, you know, not a crash, but it's going to be a larger range that lasts, you know, long time, you know, a decades long patch, right? Slow patch like the 70s were, just for a totally different set of reasons. This, I hadn't written it off, but I kept leaving it out there saying it looks doubtful. Well, it's, you know, still doubtful, you know, given that we've broken out. But if we fall back into this range and then can't get back over it, then maybe this does come back to life. That's something we need to be aware of, and we need to keep monitoring. Larger picture, though, we should see a bounce. I do expect it. I fully expect. There's a 90th percentile kind of probability associated with this thing getting a bounce. The only question is we don't know how much demand there will be relative to supply. We don't know what kind of a bounce we'll get. Will it be a big one? Will it be a small one? We don't know that. All we know is that it should bounce. And so we have to monitor it when it does bounce, and then monitor what it does as it comes into those resistance areas with the expectation that it might pull back. And then that pullback, if it breaks again, right, then it can lead to something larger. But that's a little ways out. That's what we're monitoring. That's what we're looking at. Now, we can get a view of that before it happens by simply walking over and watching how things on a more granular level take place. And what I'm talking about is if we just start going through the various sectors and monitor how those sectors come back into their retest regenerate zones, right, that will give us a clue. For example, here, if I look at the ITB is coming in doing a bullish retest regen, volume on the breakout heavier than volume on the way back down, right? So all of this actually looks positive, and you would expect that to look positive because that's been a very strong sector. You look at it on the weekly, it's already doing the full retest regen. So here, and that's what it should do, right? Because it came back within 6 bars. It needs to hold. In other words, it needs to hold here this week. And almost every one of these that we're going to look at, right, they have the exact same setup. Here's the SOX. SOX is coming back into a retest regen. It's fully into it already. You don't want to see it go more down. If we look at the IYR, going back to the real estate area, that was the home builders ITB. Here's the real estate. Full retest regen taking place, volume expanding. You need to find the bottom here. If we look at energy, right, it's a full retest on the daily as well as the weekly. Here's the daily. There's the, well, not a full retest. It's doing a retest regen. Well, no, there it is. There's the full retest regen. I thought it was. Volume not as heavy, coming back doing a full retest regen. That's the area right there it has to hold. And it's already doing it. It's doing it on a weekly as well. You have the breakout here over this high, coming back to do the retest regen. And I can go through chart after chart after chart, whether it's the financials, whether it's the XLV. I can go through all of these. They all are doing the retest regens. If these start to break and hold for a couple days, then we're probably going to see that deep retest, some sort of a weak bounce. If they hold here, we get a bottom tomorrow on Monday and flip back around and they hold, then it's a totally different story, right? They do exactly what you would expect them to do, and then you see some sort of a bounce ensue immediately. And that's where we can look to start the week. How do these behave? What do they do? And what kind of a retrace do we really get or not? Now, the thing I would note, usually when you get these sell-offs, you actually see money go to the safety. There was no money going to the safety. These safety stocks had gotten pushed so high, right, that when, I talked about them before, I think, on some other show, that, they just didn't look healthy. And that's because they got pushed so high. And look at the volume come out of these safety stocks, so-called safety stocks, right? There's nothing safe in these safety stocks right now. Are they still big uptrends? Yeah, they are. And it's going to take a while for that to change. But this, when you see this kind of stuff taking place, it's telling you that, they just got overbought. They just went too far. And that's true here. It's also true if I look at the utilities. Utilities, the same thing, right? Look at the money coming out of the utilities. This trend down hasn't found any buyers on the way back. Okay, what else do we got? So that's what we should monitor to start the week, and we should see if we see those things start to hold, right? Then we'll see some sort of an immediate bounce potentially starting to take place. I also want to pull up, and let me pull this up and show you this. This is the general market trends. You can get to this, just come up here, resources, current trends, market trends, when you're logged in. And if you look at this, what you see here, we were talking about the fact that we needed resets. We got a reset on the short-term trend, right? We got a reset to bearish, and we got a reset on almost every one of these already. One day, boom, reset. And that's not surprising because everything was going sideways for so long. And so we got the reset, we pushed back down. Now the question is this just a temporary storm that clears the weather, right, for this thing to go up and make new highs again? That remains to be seen, but we'll see. What we do know now is that every one of these have reset. That's the good news. Bad news, it happened in a way that was worse than you would want to see. That could actually end up being good news, though, and that is that it scares the heck out of everybody and allows this market to actually take off again, because the market loves to take the most money from the most people most of the time. And so, it takes and freaks everybody out. Everybody sells off maybe in the morning, and then all of a sudden it starts climbing right back up again. I mean, that could very well be what happens. Right now, as long as this starts to reset and we start to see some of these go back to bullish again, right? If we see 2 or 3 of these turn back the other way, right, then these are probably not going to reset. If we don't, if we continue to see this weak for some extended period of time, then that, of course, can push over into this time frame. And if we start seeing some of these change, then we've got something larger taking place. And that's what we have to be monitoring on a bit longer term time frame. Fundamentally, right, I laid this out, I think it was the week before last, maybe it was last week, but I outlined those events, from a fundamental perspective, news events that we knew were going to take place, because I expected news was what's going to trigger the selling when it finally happened. We didn't know which of these would do it. Well, it turned out it was the ECB. Why is that? Well, the ECB finally kind of said, hey, I don't think we're going to do anything else. And they didn't even hint towards doing something else. Now, if that's really a sea change, in other words, if the central bankers are really getting to the limits of their policy and the market senses that, that's going to be a big deal. I don't know that that's what's happening, but that has the potential to be big. And why is that? Well, the main reason for it is the bonds. If we go look at the bonds, the bond market has been pushed up for so long as a result of artificial demand. And I don't say that lightly. It really was artificial. Why is it artificial? Well, because the various agencies, central banks around the world, have been creating artificial demand. In other words, when they do QE, what are they doing? They're going out and buying bonds. What does that do? That puts more bids for bonds, right, which drives these things higher. Bonds typically go up for two reasons. They go up because of fear, in the general equities, and so money runs to safety. They also go up as a result of artificial demand. In other words, more demand than supply. Well, a funny thing happened Friday. Fear came into the market, but what did the bonds do? They sold off. Why are they selling off? Because this demand potentially is going away. And if that's true on a longer term basis, that's going to be a real problem. And so that's something for us to monitor. And that's not only the case here in the U.S., but that's the case around the world. That's what we want to watch. And so that breakdown that took place off this little ledge that was here, right? That breakdown brings bonds back now into this big high volume swing point. Wide price spread, I wouldn't say it's high volume. It's just actually a wide price swing point high. As we come into that, that's the first time now, again, just like we've seen elsewhere, it's the first time after more than 6 bars. Okay, what should happen? Well, it should not get more than a third deep into that bar. That's about what you would expect, right? Somewhere up in this area up here, this is going to get bought. And so as bonds come back, you would expect a bounce. Where can they bounce to? Then you look at the other side of it and you say, okay, I've got this big wide price move up here. There's our breakdown out of the range somewhere up into this area. And we have to monitor those things as we go forward because that will give us clues as to what's happening. And so bonds, I think, are going to be a big tell. This is an area that we have to continue to focus on. I highlighted it in Friday's notes, morning notes. If you haven't read those, I know, people get lax as the market continues to go up and up and up. But at some point, the market has a problem. And I started talking about these bonds on that morning note on Friday because the ECB decision brought my attention to it because that could be a big deal and we need to watch how these do. Because what I showed, and you can go back and read this, but what I showed is that, when these things bottom out and they go up, the market goes up. Well, same thing's going to happen if these top out and go down, right? The market's going to be under pressure as a result of it. So we have to watch this. Currencies and bonds are bigger markets than equities. If they move, they typically move the rest of the market. And so let's not lose the insight of that happening. What's the next big event in terms of news event? I know that everybody's got their eye here on the Fed. I think this is going to be the biggest one, Bank of Japan. Are they going to do the same thing the ECB did? In other words, are they going to come out and say the exact same thing? We've reached our limits. Another thing for us to focus on, and that's next Thursday. Not this coming Thursday, but the following. So that's something for us to look at. Elsewhere, and we'll have a clue if that's going to happen, given whether we hold these bullish retest regions. I mean, smart money's going to tell us. We just have to watch it, interpret what takes place on these tests, knowing what the probabilities are. We already have a slight clue, and that is that we're deeper already than we should. In other words, we should have came into the top thirds of those bullish retest regions on the S&P, and we're actually coming in deeper already. That is the negative out there from my perspective. MTTFs did reset, bottom line, but they did have more damage, right? They could have had that slight damage and held up there at the highs. They didn't. They came in deeper. That is not the most bullish scenario that you would have liked, but as I said, it may turn out to be a better one. If I come back here and show it one more time, they didn't break just this one and stay in the range. So in other words, we didn't come into here, get the reset at this price point, right, and stay inside this range. That's not what we did. We broke down through the range, and so that is a harder push than we expected. Not that we expected. We didn't know which it would happen. It is the worst of the two cases. So right now, that's going to put more emphasis on what the market does or doesn't do on the bounce, and we have to watch that. Worst case scenario is that, well, not the worst case last week. The worst case is actually what happened. We came back to that 2120 to 30 area that we were saying would be worst case. What's worst case now? Worst case is we just keep going, and we don't even get the bounce. That's highly unlikely, but it is possible, and if it does, that would be a sea change. What's the best case? We just bounce straight back up. And so rather than holding or even going much lower, potentially on Monday we get a little bit more maybe to the downside, or maybe we just gap up and keep going. That would be the best case. What's the most likely case? Most likely case in my mind is that we actually press a little bit lower on Monday, then we get the bounce. We come back in somewhere between these two bars, the two lows here. So somewhere in this range is where we try to bounce to in the coming week. I think that's the most likely case. That's in front of the Fed, in front of the BOJ. That may be a little bit optimistic, but that is what the probabilities suggest, is some sort of a bounce. Best shorter-term trade is find that bounce when it starts to take place intraday, like on a 30 and a 15-minute chart, and then hop onto it and ride it back to the top side. The best longer-term trade, I didn't really have time to consider that this week, given all the other work I was doing on what just took place. As far as the long-range themes, right? I mean, it's got a little bit of a turn taking place here. I think this is the biggest thing. That's what I've been emphasizing already today. If they don't expand QE, and if they act like they're never going to expand it again, I think it's a huge problem. This artificial demand that's been out there is going to disappear in the bond market, and that's going to have an impact on the equity markets. Let's watch that closely. That's it. I'm a little bit longer than I usually am. I'm going to cut it off here. Have a great one. It's going to be a big week. Let's ride it for what it's worth. Take care.